Say, Mark, you know what? I got Vito out there. He's, searching for a property that I'm going to use myself, but I want to supplement it with some temporary rental activity, whatever it may be.
Airbnb or long-term rental?
Well, I want to kind of get the long-term rental thing separate.
Okay.
Because I find that these are two different consumers,
Okay.
right? Like, or at least from what I'm seeing in Canada, I see three different consumers, right? The second being, hey, listen, I've got the down payment. I've got great income. I can afford to buy this place in Florida and I want to use it, but I can't really afford to carry it completely.
Right.
So I'm gonna temporarily rent it out when I'm not around. Right. So we've covered like the ins and outs of property management and whatnot on a previous interview. But in this case, when it comes to financing, does that change the process at all? Does it make it more difficult? Does it change the interest rates? Does it change the terms? What are the differences between I'm going to use this property myself completely to now there's going to be a bunch of strangers popping in and out of this thing once in a while?
Okay, great question again. It depends on whether we're going with Plan A with the bank with the great rates. If you qualify for that loan, just buy it as your second home, and then you can Airbnb it when you're not home. Okay. Very, very easy.
Do I have to tell the
No, because you qualify for it, so you don't need that rental income.
I got it.
Now let's say that you don't qualify with your tax returns.
Okay.
Now that's when you go to Plan B, and that's with the 8-point-something rates, and the property itself is qualifying with the rental income. Then it does matter whether it's an Airbnb, because it's a different bank, or whether it's a long-term rental. The rates are going to be somewhere between that 7.9 to 8.6% range. And then the property itself qualifies. You do not have to give tax returns, or you don't have to give tax returns, CPA letters, any of that stuff. The rental income that the property generates based off of what the appraisal says. And there are appraisals now that are taking Airbnb into consideration.
Yeah, I know we had some challenges getting those. One time we were working on a deal together, and the appraisers weren't yet being able to do an appraisal of a short-term rental revenue.
It's kind of a new thing.
The appraiser goes, I don't know how I'm going to figure this out.
Yeah.
I'm like, well, I don't know.
So that actually, I want to backtrack a little bit. I want to be very clear to people in Canada that when we are talking about 25, 30% down, it's on appraised value, not what you're actually buying the property for. If you're stupid enough to buy it for
the lower
premium,
of the two, actually.
It's the lower of the
It's
two.
always the lower of the two.
These appraisals, though, that he's talking about in this case, they're not a typical appraisal that you're thinking where it's appraising based on the comparable sales of the neighborhood.
Okay.
They're an appraisal of the rental
Potential.
comparables and the rental potential.
So it's basically they are normalizing I'm going to butcher this, but I would assume they are normalizing rent. They are normalizing vacancy rates, normalizing expenditures, coming to some sort of a cap rate.
Correct.
And applying.
Exactly.
Okay, I got it.
Exactly.
It's an add-on to the appraisal. So the appraisal is here, and then when you have a rental schedule, it's thrown on top of it, and it depends if you're going to do long-term rental, 1-year lease, or if you're going to do short-term rental.
Okay.
And then they go out and get short-term rental comparables, vacancy factors, and then they give you a number on how much. So
then I think that the recommendation here for people that want to buy these types of properties and want to obtain financing is before you go out and start looking with the realtor, you need to understand there could be a material difference between the fair market value that two people are going to contract at and the appraised value. And you should get a good understanding of what the appraised value is to ensure that you have enough money down, or you can be on, you can be in a little bit of trouble on closing day.
Well,
right?
and that's where you make sure that you have a conditional period for your financing.
Right.
To protect you.
Well, that's what I hire you guys for.
That's why you need a good realtor.
I don't want to fucking think about
this
it.
This is a huge difference of having
right?
somebody that knows what they're talking about. What he's about to tell you can save your clients' asses 100 times.
Yeah. So we are very, very meticulous about ensuring that the contracts are written in a way that fully protect the buyer.
Okay.
It's very uncommon here in South Florida to write a contract and waive all conditions.
Okay, so
versus like you guys in Toronto, it's
that
like the
happens
Wild
quite
Wild
often.
West. It's
Yeah.
like they're used to walking in multiple offers, waiving financing,
contingencies?
no financing contingency,
Wow.
like never,
Yeah, nothing.
never.
Here,
And then
we
they gotta
protect
figure
our
it out.
buyers.
Okay.
So if there's financing, generally your contract by default provides a 30-day financing contingency period.
Well, that's a large.
We representing sellers, we don't like that. So we try and like claw it back a little bit and go with like 21 days because it does
3
take
weeks,
the bank time to go through the application process, underwriting, order the appraisal, and then giving a conditional approval, which even then, usually we're good on a conditional approval because you don't get your final approval sometimes until the night before.
Yeah.
So there's always a very, very small risk, but that risk is like more like, hey, don't go out and buy a car or do something stupid in the last, don't go buy new furniture on credit in the last couple of days before you buy a house.
Don't make a huge deposit. Don't
Jet ski.
Yeah, we've had clients that they're excited because they're about to close and they go out and buy a boat or jet skis or a car so they can fill the house.
Yeah.
And it'll come up.
We had a gentleman fully approved on a condo that we had to like go through underwriting hell on because of like conditions with the condo and under insurance of the condo and all this stuff. And the gentleman qualified based on his previous 2 years self-employment income.
Right.
And the last day to file tax returns for the current year was like 2 days before closing. And Mark told me, don't file your tax return without having me take a look at it. This gentleman went out. I think he was an accountant too. And he filed.
He's American?
American guy. Filed his tax return.
Monkey wrench the whole thing.
Loan denied.
Beautiful.
So we already had a conditional approval, almost a final approval, and boom. And I think that's probably the only time I've ever lost a deal on financing. Poor Nikki put so much work into that.
So much work, man. But the thing is that, again, me and Vito are here to help people avoid the issues and the mistakes and the common pitfalls. And we talk to our clients like we're talking to you guys here. We're very real, very honest, and we definitely want to see you succeed.
Right.
So if you follow what we say, you're going to be great.
Okay.
Again, having a realtor that understands the differences between an American and a Canadian, not only when it comes to financing, when it comes to protecting them on the contract, to culturally, to having a team that knows how to do that is key. Most people go straight to Vito because he's got the sexy product. Right?
Yeah.
The houses is what everybody wants.
They want to see the house. They want to see the property, right?
They want to see the dream.
And there's definitely more loyalty to the realtor than the mortgage broker.
Well, the realtor is
Unfortunately,
we can be
quarterback.
the mutts.
The realtor is the quarterback that throws the ball to
These guys are looked
to
at as a
everybody
commodity,
else.
right?
Yeah.
Right.
It's very common to see people shopping rates.
Oh yeah. That's
I
for
think
sure.
the number's like 95% of people will do business with the first realtor that they talk to. Now, with some of the new commission rules, it's going to be interesting, and it's fantastic seeing this come in because buyers agents are really going to have to demonstrate their value.
Yeah.
And
to get paid, you're going to have to show why,
it, right? And you absolutely should, right?
Yeah.
There's too many part-timers out there that don't have the experience that maybe want to look out for their clients and are trying to do the best thing. They just don't know because it's so and so's aunt and she does one deal a year and they're just doing a disservice to their client and we should be held to a higher professional standard to demonstrate our experience and our value that we bring to our clients.
Perfect. So there's a lot of nuances. But listen, there's a lot of small nuances that you have to pay attention to. That I would never have thought of until I actually spoke to you guys. But it seems that the Airbnb sort of strategy, it really comes down to a similar qualification process to the personal. Like if you want to get the good rates, it comes down to a similar process. It's do you have the income to back it up? Do you have the money to support yourself for 12 months? And does the appraisal come in reasonable? Right?
It's
pretty
like
straightforward.
People think it's complicated, but it's
pretty
very,
straightforward.
very basic math and very basic things.
Okay.
It is. And when you say what are the watches, like be honest, be upfront, tell us what we're dealing with so we can help you navigate it and get you to the finish line.
Okay.
Attorney-client privilege.
Yeah.
Tell me everything.
much.
Let me tell you how to present it to the lender so you get an approval.
Okay.
And there's different lenders who ask for different things. So like Vito said, if you lay all your cards on the table up front, this is how much money I actually have. This is how much I want to invest. This is how much reserves I'll have after that fact.
Right.
And this is what's on my tax return. From there on, we can give you one of the three options, and all you got to do is say, I like plan B, or I like plan C, or let's try plan A. We'll give you an estimate, everything written up front. That's another thing, is I'm going to give you everything written up front so you know exactly what you're getting yourself into. This is not the blind leading the blind. We want you to know exactly how much money you're going to need, how much money you got to declare in reserves, what your payments are going to be. We'll help you shop for insurance. Like, we've really got your back. Vito's built an amazing team that his entire team is dedicated to having his clients be successful. And that's one of the reasons why he invites us over to help his clients with financing. We have the same exact view on what our buyers are, which is everything to us.
Perfect.
We need to take care of these people. And almost everybody that we talk to wants to live in South Florida. This is like the place to be in the United States right now. And it's getting more and more difficult because the prices are going up and because there's a lot of people who really don't know how to take care of you. So coming to a team that has already experience in getting this done makes a world of difference.
And ultimately, like, if financing is required, we need someone that we can trust, rely on, and that will take it to the finish line. Because at the end of the day, client doesn't get what they want. We don't get paid. He doesn't get paid.
Yeah. No,
nothing happens without
100%.
financing in place, right?
And then everybody's pissed off.
Due diligence, right? You got to make sure.
Yeah, for sure.
And,
for
and
sure.
look, has there been close calls? Yes, for various
But that's
reasons.
going to happen in any business. You're going to get close calls.